Hello everybody, hope that you are very well and welcome to this evening's Contenders live stream, where a very good one we have starting tonight and going on for the foreseeable future. We have the Volume series. I predict this could go on for about 6, 7, 8 weeks is what I have planned. Leaning towards 8 weeks. So yeah, we have a lot to go through. So it's pretty exciting. I know that volume is such a crucial part of trading, but it's also pretty complex when you get into the deep end of volume. And obviously when we're going to start looking at footprint charts, that's pretty advanced stuff, so it's obviously really exciting for all of you to get your foot in the, I don't know what's the expression, get your feet wet in the realms of volume. Okay, so yeah, there's gonna be really great. So yeah, I'm excited to teach you all about this. And starting tonight being the first lesson, it's more of a part one sort of introduction, so you all understand what volume is, what exactly it means, because you get some, you do get some confusion, and then how we use volume as confirmation. Okay, so each week there's going to be sort of a target, I suppose, a target that you can set yourself at the start, which I will say, and then by the end of it you want to tick it off your list and say, right, I definitely know how to do that. Obviously before we move on, getting, I would say, more advanced and more advanced and more advanced, more advanced and more advanced, you want to make sure you understand part one before, obviously, if you're not watching this live right now, then watch part one a few times before you go on to part two. If you understand everything tonight, then brilliant, and you can be ready for part two. So yeah, that's the process that I'm going to go through and how I'm teaching this. So yeah, I think it's going to be really great. I really do, because yeah, as I said, volume is such a massive part, and it's not the easiest place to really learn it well. You have to make sure you there's a lot of ways you can get confused when you get into more advanced stuff. This is so you want to be make sure you're very on point with what you're learning, really. So yeah, it's going to be great. So obviously before I begin, got to give this slight disclaimer. If you just want to read this a second as I take a drink, pause the screen, all that good stuff, read through the legal stuff, and we can begin. So I want to start off with Cardano ADA chart of the week. And this is actually a really I kind of liked the chart of the week. As you all know, let's just take a look at the market right now. Well, you can see actually the cryptocurrency market is not so bad, but if you take a look at the general markets, okay, you're seeing the S&P down 10%. You're seeing all these stocks crashing 50, 60, 70%. It's just it's really likely that we're going to be going into a recession. So everything's just crashing. Everybody's taking their money out of the markets. Bitcoin or cryptocurrency in general holding up so much better than everything else, which is pretty good, I suppose. It kind of is pretty good. You would have envisioned, okay, one would have imagined that Bitcoin would have held its correlation as it's held and broken the lows and moved down. And as it hasn't, is that a sign of strength? I suppose somewhat, but by the end of the stream, we'll be able to tell by looking at volume. Is Bitcoin looking strong as it is right now, or is it just in consolidation before another leg? So will remind me to answer that question at the end, because I probably will forget why. So someone hold me to that. So yeah, obviously, yeah, I just wanted to mention the whole bigger picture still is in full effect. The coronavirus, everybody's so scared. Literally, there's so much fear. Not just in the markets, but just general public, And I suppose that's one of the pluses, a massive plus of being a trader, okay? And I've probably read in specifically the Champions chat, there's a good now 10 people that have had to go, essentially leave their job or at least work from home, and or some of them have just being sent home, no pay. So when they're being left in this position, then literally this is getting thrown in the deep end. Suddenly getting thrown out of your job, being left with no pay, and saying, right, I need to make money through trading to survive. So some people are right in the deep end with this, going full, I hope you wish you all the best. But, you have to remember at this sort of stage, it is quite a step forward when you haven't even finished all the learning content. But nevertheless, it's still going to be an experience for yourself. But I wish you all the best. But as I was trying to say that, this is why trading is such a plus, because you can do it anywhere in the world. All you need is an internet connection, and you are there. Essentially, as long as you do your trading good, then you are ready to make money anywhere in the world at any hour of the day. You can log on, make some money, log off, sort of thing. So, it's a very unique and fortunate position to be in, being a trader. I truly believe that. So, chart of the week, what was it? So, this is what I had in mind a few days ago when I took this yesterday, okay? I was looking at this and I want to say that this is not perfect, okay? So this is not by any stretch of the means in terms of volume, okay? In terms of volume, it's not technically so correct, but nevertheless, I like the chart here. I feel it is, for me personally, very much similar to an accumulation schematic, okay? So whether this is officially correct or officially not correct, nevertheless, it's still what I'm looking for. It's still 100% a valid trade. 100% this is a valid trade. So It's worth going through. Obviously, like in terms of accumulation schematics, this is obviously Wyckoff is like a type of it has a heavy focus on volume, and I wanted to do like a chart of the week this week to start to kind of get your minds thinking of volume, okay, what you're looking for. And obviously when you think of accumulation and when you think of a distribution, okay, both of those are highly relevant on volume. How to determine whether you're in distribution or accumulation, it's all about the volume. And obviously this is what things we'll be covering, but it all starts, well, it doesn't really start with it, but Wyckoff is primarily derived from volume. So it's good to get your brain thinking about it, what I'm looking for here. Okay. So obviously have a few steps here. I'm not going over Wyckoff theory tonight, by the way, but nevertheless I can talk you briefly through what we got here. So you obviously have like a primary set. Never can say this word right. I've done this on a stream before. Primary selling stage, selling climax, automatic rally, secondary test, and then obviously you break your second high of the automatic rally to give you 2 key points: the high of the automatic rally and the high of the overall secondary rally after the automatic rally, after the secondary climax. Okay, so these are 2 really important resistances. Okay, so those are them for me, the 2 most important resistances right now. And then we have arguably down for that secondary test once more, but I am looking for a spring. Okay, so what does that include? It's basically a swing failure pattern. Okay, so we're looking for a swing failure pattern down through the lows. Okay, once we've seen that swing failure pattern, which in Wyckoff is known as a spring, you come down, you take everybody out of their positions. What I like so much about Cardano is because we have been in this for 251 days. So a very long time, okay? Very long time indeed. For crypto, that's a long time to be like this. So very much would love to take there's coming on a year, okay? It's coming on a year. Obviously, a little bit under, but nevertheless, what's a long time. It'll be great to take everyone out of their positions, take everybody out and then go. That's always what I like to do. If I'm looking for a long, I want everybody else to either have been stopped out of their long, e.g. I get into a long when everybody else is getting stopped out, and then they see the price start to go up, and then they're like, oh my god, I just got stopped out, and then they all start market buying back in, e.g. it just shoots the price up. So easy to make money that way. And I also enjoy looking for longs when everybody else is looking for shorts. You can imagine you come down for these lows right now, average Joe is going to be thinking, right, Cardano's dead, here we go, time to sell, whereas I'm thinking, right, Wyckoff accumulation, time to buy, let's go. So you never want to be on the majority of the market. You never ever, well, that's the wrong word, not never ever, because right now I'm currently just shorting stocks, like find a stock, short a stock, and I imagine quite a lot of other people are doing it. So obviously there's a time and the place to be like on the side of what everyone else is kind of thinking, but nevertheless, you generally don't want to be, and this is a situation where you're definitely going to be against the market. So that obviously requires like this step of confirmation. So what is the confirmation? You get to spring, which is the swing failure pattern. But you don't generally long straight after the swing failure pattern, although you can 100% you can, but you generally are going to be waiting for this test. So that's obviously going through the level. Okay, so you go through the level here, through the level, and then you come back above the level, you retest that level, and then you're looking for here's known as the last point of support. So obviously something like this, resistance flip to support. If you do the swing failure, you then hold that test and then you move back on and make a new high, come and test that low and move on. That's your last point of support that you are looking for to really take this up to these key levels. Okay, those would be the first sort of targets: key level 1, key level 2. Get through that, and you're looking for really massive potential sort of gains. Okay, so you're even from there to there 200%. So that's kind of what I have on my idea. That's what I'm waiting for, very patiently indeed. I have not got any bids preset, but that is the schematic that I am 100% would love to see, because there would be so much money to be made off of it. Sorry. Yeah, that's kind of what I'm looking for here. Okay, so obviously a few things to bear in mind that you'd want to see through the swing failure pattern. You'd obviously want to see, kind of like I've hinted on before, we haven't actually really seen anything like capitulation on Cardano. There's even the selling climax. This is why the volume profile doesn't fit so well to the schematic, because the selling climax wasn't really massive volume. Okay, obviously, so it didn't break the low either, which I kind of like to see, but so it's not perfect, but nothing is this is where you don't get textbook scenarios, especially in like cryptocurrency. And if someone waits for a textbook scenario, then they just miss out, because nothing this is the real world. It's not a textbook, is it? So it's not a textbook kind of, so amazing, but nevertheless, I really like it. So what would we want to see? We would kind of want to see like some sort of capitulation, really high sell volume through the lows. Okay, really high volume through the lows, then bought back up. That would be really nice indeed, especially if we go through the lows on really high volume and then a decrease in, well, actually you can't manage any of that, but nevertheless, envision this is Bitcoin for the theory side of things. You want to see like this breakdown, really high volume, decrease in open interest, and then as you break back above, you want to see some imbalances. So imbalances to the buy side, breaking back through that, and then retesting the level. So breaking that, as you come up here with some imbalances, you want to see high bull volume, increase in open interest. As you pull back, a decrease in volume, decrease in open interest. As you break up again, get some more buying imbalances, get an increase in open interest, get an increase in volume, and then you're off to the races, sort of thing. Really low risk trades. Okay, these sort of trades are extremely low risk for the upside potential. Okay, let's say on the average sort of swing failure trade, you risk about like 2-3%. For what in this instance, you're after like 200% gain. So, the risk to the reward when trading swing failures, anything like this, is extremely high to the massive amount of rewards that you can get. So the one off that I can remember offhand, slightly off topic here, but this is the last one that I traded really well, based off of a similar kind of schematic, was Mana. Okay, so as you all know, Mana done a really similar schematic. Okay, we obviously had on this one your primary selling, okay, your original low, your automatic rallies, and then this was the spring. Okay, so this was the spring on Mana, and look at this, obviously done the spring. You got your move back up off of the spring, you got your test, and then you got your you definitely got your last point of support before it absolutely took off. So you think from where it done that swing failure, if you bought at a close of that swing failure, to let's just say we didn't sell the exact high, but we sold around around the highs, 100%, even up to the original, what you'd have been looking at for past resistances, like 73 to 100%, like Mana, like textbook kind of that was like a real textbook accumulation schematic, and it gave 100% gain. So these sort of trades, that's just one that I remembered offhand, but there's a lot of examples. But nevertheless, I love trading these type of trades because the risk is so low. You're not hardly risking anything for the amount of reward that you can get off of it. And it's not just like the risk is low, obviously, but also the fact like it's really defined where you're wrong. So the invalidation is so easy. Okay, 100% where your stop loss is going to be, and you can just kind of buy it and wait. Okay, just buy it and take a step back, and if you're correct with your analysis, you get rewarded massively. And for another thing, carrying on, like, let's say you identify four accumulation schematics, and let's say you get 3 incorrect and you get 1 right. Okay, so remember, those 3 incorrect, you've lost, let's say 5%, and 5%, you lose 15%, let's say overall, for sort of thing, and then your 1 winner gives you like 100% gain. Well, with only a 25% win rate there, okay, you have you're up you're up massively in terms of your dollar amount. Okay, so that's why I love to take these type of trades. And anyway, that's Cardano chart of the week. So yeah, close eye on this one. Obviously there's nothing in the short term, but I really love how it's looking. Like, I really like this one. So as I mentioned here, I want to see like a wick-off style accumulation spring, and then a test to enter a long-term swing trade, long-term trade, stop loss at invalidation, which is the low of the wick. If and when formed, we don't know whether it's going to do this. It obviously could just crash straight through and keep going down. In that case, we don't lose any money because we never even tried to enter. We're waiting for the spring. Okay. And targeting the automatic rally high at the very least. Okay, so at the very least, you'd be looking for 30, nearly 40%. Okay, so it's obviously a good setup potential here, but all it is at the moment is potential. We might not come down this low, or we might just go straight through it. So those are 2 possibilities you have to be aware of, and either one of those are good for us, really, because you don't lose any money from those if either of those things happen. But if you do get what you want to see happen, then you're in a really amazing position to make a lot of money. So that's obviously what you want. So with all that said, I really hope everyone's going to hear me, by the way. I truly hope that all of this was heard, and I hope the volume's okay. I really hope the volume is okay, because I've been like adjusting things around with the volume and stuff. And obviously yesterday I done that live stream over on DLive, and that was just a really random live stream, but I know I changed around a lot of the volume settings because of the fact it was a different program. So if someone could just confirm that you can hear me before I continue, so I have this like awful, just have a feeling that. Well, I know 100%. I changed around a lot of the settings in my software for that live stream I done last night. Volume's okay. Okay, brilliant. Cool. That question that I just saw there that I'll answer is, where am I paying attention? Literally the low. So this key level here, you just put an alert on the key level, maybe a little bit above it. Put an alert at like 405 sats. Okay, just have an alert waiting. I mean, we can set it together. So like 405 sats. Let's just have an alert and just have that sort of alert ready and waiting. 405 ish sats, somewhere around these lows. Yeah, 405, 408 sats. You just want to be alerted of it, but there's nothing for me at the moment on Cardano, but you want to see this come together. So yeah, alert around 407, 408 sats makes sense. Okay, cool. So the volume is better. Yeah, yeah. Yeah, the volume. I have, by the way, got a new travel mic. So the next time I do go traveling and I do live streams, I have got like a much better mic now. I got a headset. So I bought a headset because it makes it easier when traveling. But obviously with the coronavirus, I won't be traveling for the foreseeable future. I'll be stuck in my house. And there we go. So volume. So volume. So obviously the great start that we do have here. So lesson number 1 is kind of an introduction to volume, which I have on this slide, and then we're going to be going through volume confirmation. You've probably heard the word volume confirmation talked about, but tonight you can have a definitive answer of what that is. Okay, so volume in general. Okay, so volume is the number of contracts. Okay, and you have to think contracts. Obviously, here I'm referring to like BitMEX contracts. But obviously, there's volume across the whole market sort of thing. But volume is the number of contracts bought and sold. Okay, and then added together to give a total on the specific time frame you are looking at. Okay, so I hope that makes sense. So when you are looking at volume, okay, so for example here I've put like on the 5-minute chart I always try and refer it to Bitcoin because the majority of us here are Bitcoin traders, but obviously if you get what I'm trying to say here, that if you trade stocks and it's the same sort of thing. But for example, on the 5-minute chart, each candle can be 5 million. Okay, so each volume candle is 5 million, but then on the hourly, that one volume candle on the histogram sort of volume is going to say that 308 million. Okay, so it's that, and that candle of 5 million, you don't know whether 4 million was buys, 1 million was sells. It's just total 5 million. Okay, obviously we can zoom into the candles and get all that information. How much was a buy, how much was a sell, how much was at market. You can get all of that information, but obviously that's what we're working up to get up to that next level. But just standard operations on the volume charts, all you can see is how much was bought. And obviously, is that information useful? Yes, it is useful, but obviously the more in depth you get onto it, it's just like opening a whole can of worms sort of thing. But sorry, my throat is still a little bit there you go. Sorry, I apologize. So, just a note. I should have probably put this a little bit lower, but nevertheless, obviously when we're referring to volume, okay, when we're referring to volume, when we're looking at coins to trade, okay, there's a few questions that I thought of that. What are people going to be like questioning? Okay, I've tried to, especially at the end, I've got a slide of questions, but then this is one that I just thought I'd like start with, because there's one thing for me that's really important when you look at volume, okay? And this is why, generally speaking, especially in cryptocurrency, especially in cryptocurrency, let's say you like load up Binance and you look at coins to trade. Okay, and you've obviously got 1,000 different altcoins or whatever, you know, it's not 1,000, you know, you've got 500 altcoins to trade. You want to be really careful with the coins that you're selecting. So I'll give you a little tip, okay? I wasn't planning to do this, but I'll give you a little tip of like the ways that I would look if I was looking to trade an altcoin and I wasn't so caring about what it was. I just wanted to trade something. So let's imagine you log onto your computer in the morning, you have 1 hour free, okay? So you have 1 hour, you want to trade something, you don't care what it is, but you want to be trading a really volatile asset because you want to be getting in, getting out, getting in, getting out, and, you know, just do some quick scalps in the morning for an hour, make some money, and go off and do something else. So if that's the case, what are you going to be looking at? So what the thing that I do anyway, okay, is what I'd come across to Binance. I go across to the markets. Okay, once you're on the markets, what I will do is really simply is sort it by 24-hour volume. Okay, so 24-hour volume. You can see like here. So for an example, as I've said here, I would only really look to trade. Okay, let's just say I've made it safe here. 200 plus Bitcoin volume. You see this one? So this coin here, COS, whatever this is. This has 1 Bitcoin volume in all of the day. I mean, seriously, you could, you know, I imagine like 90% of the people here, all of us, we could just go to this coin and buy it at market and it's going to move instantly, like moving instantly, like 100%. Like, this is crazy. You just cannot trade something that's got 1 Bitcoin volume. It's just ludicrous and very bad idea. But let's imagine that you're a newer trader and you did not know this. Then you might go on here and just buy something and then you're going to lose all your money. So you have to be really careful. I mean, so what are we looking for? We're looking for at least 200. So I like to sort it by volume on the highest, okay, volume with the highest, or I'll alternatively sort it by what's up the most, okay. So I like to trade coins which are really green on Binance, to be honest. So for example, what would meet our criteria? Above 200 volume and 44%. So Steem would be, if I wanted to just go on, trade something and not care what it was, trade something for, you know, 10 15 minutes, an hour, and go, I'd say Steem is an amazing coin to be trading right now, okay. Steem, Dash, ZEC arguably, but you know, Steem and Dash are they're definitely the two that I would say, right, yeah, there's trades, you can definitely go in there and make some trades, good volume and really good volatility, because that's what you want as a scalper. You want volatility. So that's the way that I like to sort it, either by 24-hour volume, where I'd look for 200 plus, but if we can get a mixture of you know, especially if it's above like 500 and it's moving this much, like these two are perfect. Steem and Dash would be perfect for scalping, okay, and you can definitely go in there straight away. Just seeing, like, for example, this is not one that you would trade. So this is up 13%, but it's got 23 volume. I mean, like, no way ever would you be touching this, okay? So this is like, no way would you touch this. And, you know, sometimes you can see coins that are up like literally 100%, and then you see their 24-hour volume is like 10 Bitcoin. It's telling you this is some sort of like pump and dump, or somebody's just accidentally clicked buy at market, you know, some sort of mistake or you know, some anomaly. You don't want to be trading those sort of things, okay? So pay a really close attention to the volume before you start to trade it. Really important, okay? And so why is it so important? It's because liquidity, okay? So liquidity in the market is so important, okay? With no liquidity, you will I've kind of used counter will likely you will lose a lot of money, okay? Very likely you do. Because what happens in an illiquid market, okay, firstly, the spread is likely going to be really big. I haven't wrote here actually what spread is, so I can explain what spread is. Okay, so let's go back to Binance, because I just remembered I haven't included a bit on this, but it's kind of important actually. So what we can do is let's go to the spread of, I don't know, this just random coin here. It's going to be pretty good. Okay, so it's probably easier if I explain this on a fiat exchange. It's just a little bit easier to see the difference. Okay, so the spread here, you can see that you're buying okay, at 180 and 30 cents, and the sell is 180 and 44 cents. So what we're seeing about more or less, you know, it changes, it's changing all the time, but we can say it's about a 10-cent spread. Okay, so from the buyers to the sellers, there's a 10 cent spread, more or less. Okay, so if you wanted to get filled on a long straight away, well, if you wanted to try and get filled on a long, then you could, for example, right now put 180 and 40 cents. Okay, and you're going to go straight to the top of the spread, and then as soon as someone sells, you're going to be the first person to get bought, because you are going above what the the spread is here. So same if you wanted to sell, you could put a sell order of 180 and 57, and you're going to be the first on the order book. Okay, so why is the spread important? You don't really want to be trading something which has a really big spread. Okay, so why would you not want to trade something that's got a really big spread? Well, it really is signifying to you that the liquidity is probably really low. I like to trade something where the spread is as small as possible. Okay, so 10 cents is okay. I don't trade the USD markets, as you know, but nevertheless, 10 cents for Bitcoin Cash. I don't know if this is normal or not. I honestly don't trade this coin, but obviously if you are regularly trading something, then you're going to know what the average spread is of your coin, because that's what you should know. But yeah, if I want to trade something which is a really, really, really small spread, and I want to see really high volume, okay, because it's easier to get in and out of positions. Okay, so what you have to think, that if you have no volume or no liquidity, so go back to that coin which had like 1 Bitcoin volume. If you're trying to sell and the 24-hour volume is 1 Bitcoin, you are going to be sat there all day trying to sell or trying to buy. You're just not going to get fills. And so it's awful, isn't it? Secondly, how many times have you had, I can guarantee it's probably happened to everybody. How many times have you been in a trade? Let's say you were in, really good example of this would be Matic. Okay, so think back a few months on Matic, when Matic rose, what was it, like 350%, like in a relatively small amount of time. Okay, and then in one day it dropped 70%. Okay, and why was that so bad? I guess Matic is not the best example, but nevertheless the theory is what we're after here. So with it dropping 70% in a day, you can imagine that you would have had your stop loss at maybe 5%, but you actually got filled maybe 25%. So what you thought was going to be a 5% loss turns into like a 25% loss, and this is known as slippage. Okay. And slippage is like 100 times worse on an illiquid asset. Hence why you only want to trade where there's liquidity, because otherwise you're going to experience extreme slippage. Okay, and that is definitely not what you want, because you could it's just going to wreck you real quickly, because what you are thinking you might only lose like 5%, yeah, literally you could be losing like 25%, and you had not planned for that when you're making your position sizes. So moral of the story, to get around that, only trade liquid assets and you will be fine. And obviously Bitcoin is the most liquid asset in crypto. Hence, this is the main reason for me why I do trade altcoins. As you all know, I trade altcoins, but I always love trading Bitcoin because I know that I can get filled. Saying that, at the moment, I'm not in Bitcoin because I wouldn't enjoy trying to trade Bitcoin right now, okay? Because I trade with, quite a big size. Then if I'm trying to get positions filled, yeah, you can get positions filled, but it takes time. It's not actually so fun. Hence why over literally the last few weeks, all I've been doing is trading stocks, because the liquidity there is still there on stocks. Buy side, not so much, but you can still get filled. It's easy. It's so much easier because there's obviously like billions flowing through it. So it's easy. Whereas if you try and enter some big sizes on Bitcoin, yeah, you can get filled, but like you need to see some sort of engineering of liquidity. Okay, so how do you do that? You obviously get your stop runs, you get your swing failure patterns. I mean, you can see the evidence that where there's like really low liquidity. So you can see here, like everything's like swing failure here, swing failure, you go back down here, swing failure, you go back down here, swing failure, you go back down. Okay, and then to the buy side, here you kind of get your swing failures and you end up going back up. Here on the last run here, obviously here, swing failure, you go massively back up to the upside. Obviously that's in the end like a 8% move, like really, really big moves, but everything's off of swing failure patterns. Okay, so that's just, to me anyway, it's just like signifying, the volume is awful. The volume is so low. If you actually can be bothered to trade this, and I know there are some people trading it and they're making money, like congratulations, but generally I think the people that are trading this are somewhat smaller position sizes. Yeah, you can make money with smaller position sizes, but if you try and trade it with actually big sizes, it's pretty difficult, and you need these swing failures. But I mean, so Yeah, 100% you can make money, but I don't know. It's just not for me anyway. It's hardly worth it. But anyway, so that's just one sign of really low liquidity at the moment in the Bitcoin market, is that just everything's swing failures. So like, as we know, we can trade swing failure patterns, but it is just a little bit like you have to wait. Like, for instance, here, when you're in the middle of the chart, you had to wait like another 4 hours before you can trade. So like waiting for positions is taking a long time, because you're having to like wait for the swing failure. This is referring to if you have size anyway. Like, you have to just be waiting there for like, you could be waiting 10 hours for the swing failure. Okay. So it's taking a long time to kind of build positions. Okay, as we were going through like yesterday, I wanted to like build a long, and you were looking, it was about 300. I can't remember the setup that I was looking at now anyway. Can't remember which one it was, but nevertheless, let's just say we wanted to fill a long. Then you'd have, at all of this time while it was coming down, you can't be like filling the big positions here, because there's not the liquidity, there's not the volume throwing through. But then you come down, you take the lows. Obviously, you've held on to it for a little bit of time, but you'd have got filled on these positions. You could fill, easily, probably like a few million easy. To be honest, like there's that liquidity, but it's just like waiting for it, and it's a little bit like, I don't know. It's not my, I don't know. I just have no money in crypto at the moment. But yeah. So that's basically why you want to wait for liquidity, why you want to see the volume. Firstly, it just really is really important for the slippage, and secondly, it's just it's for instance, you kind of want to think like a big trader. Okay, always try and like think, even if you're not trading with size, try and think as if you have the size, I suppose. And like, if something is really hard to disguise, like for example, if you want to feel like a big position, you're going to use something such as like an iceberg order. But if you are trying to like iceberg order and the liquidity is really low, then it's going to be really obvious that there's like a buy wall there. Okay, so it's really obvious when there's walls, when the liquidity is low, because you see people selling and nothing's happening. And when there's a lot of buys and sells happening, it's somewhat disguisable. You can still tell, but it's somewhat disguisable, whereas now it would just be like so obvious sort of thing. So it's just not ideal, I don't think, for anybody. I just can't think it's ideal, the Bitcoin market at the moment. But yeah, anyway, so this is kind of being point number 2, but as I was mentioning up here, for every buyer there is a seller. Okay, so you can only sell something if there's someone willing to buy it, and you can only buy something if there's someone willing to sell it. So for every buyer there is a seller. Okay, so you have to firstly, some people struggle to comprehend that, but we're on Bitcoin, we know we're trading futures. 100%, you have to have a buyer for every seller. You cannot just sell something if there's nobody buying. Okay. So for every seller there is a buyer, and each volume tick at the bottom of the chart shows the combination of both buys and sells to give overall volume. Okay, so very much related to this comment. Probably should have changed the order and put it something like this to be a bit more congruent, but there you go. So like every seller there is a buyer, and at the bottom of the chart you see the overall volume. Okay. And lastly on this slide, the volume is a great way of confirming a trend. Okay, so what we're going to be going through tonight okay, is like the confirmation of a trend. Okay, confirmation of a reversal, confirmation of a breakout. Okay, so how can you confirm using volume that this is happening? Okay, that this is actually real. Volume is one of the first things anyway, that I would look for to when I trade an asset. Okay, so as I mentioned earlier, we've gone through the steps of what I'm looking for, but then one of the first things I'm looking for, if I'm wanting to trade a trend, why 100% need to know what the volume's doing. Okay, so it's like one of the first things every time you're going to be looking for. Okay, 1 second. Okay, cool. So these are going to be some of the websites that we are going to be using over the next, let's say 8 weeks. Okay, so we're going to be using a lot of these. We're going to be using these websites. Okay, so this is the thing with volume. Okay. Volume is not so readily available. It's not so easy to get. Okay, so you have to, think back to when people were trading on the floors. Okay, so let's cast our mind back 20 years ago, where people would be waiting on the floors, and to get your volume data, you had to wait till the end of the day before you could see how much volume was transacted. But obviously nowadays that's readily available to us in real time, like such an advantage. But it's generally for the good sort of data. And TradingView, like TradingView is free, and you can see like this, you can see the candlestick. But if we actually want to see, okay, look and zoom into this candlestick, see exactly what's going on within the candlestick, you have to imagine like this is a 2D picture of volume. This is just 2D. We want 3D, we want 4D, we want the whole picture, what's happening exactly inside of this candle. Okay, there's so much more information than just this that you can get. Okay, and that you do have to pay for, unfortunately, I suppose. Like it's not free. So I'm just going to list the websites here. I'm not saying go out and buy, don't sign up and buy for all these services. A lot of them do the same sort of thing. So it's not, you definitely don't need to pay for all of these at the moment, but they all have a free version. Okay, so I'm pretty certain they will all have free versions. So Sierra Charts, no, but I think I pay for them all, but I think offhand they all have a free version. So I recommend, just getting ready for the next weeks to come. I'll click on these websites quickly and just give you an overview, really, briefly of what they are, so what we use them for. So this is obviously, I really like this one. It's kind of got your heat map. Okay, so you can see the heat maps, so you can see where buy and sell walls are. Okay, from extreme to not so extreme, but we'll be going through these websites in more detail. So I guess I don't need to go through it too much. Basically, got your heat map. You got a Sierra Charts and Exo Charts. They are pretty similar. Okay, so here you can see your volumes, your open interest details, and then you obviously have being able to zoom in and see your sort of exactly getting your footprint charts. Okay, so you've got that on that website. Then Tensor Charts I like to use for specifically. I like to use Tensor Charts. Again, you've got heat maps on here, but I like to use the line studies. Okay, and you can see the CVD divergences. That's really useful. Coin Farm Online is the next. Oh, come on, don't crash on me. Don't crash on me. No. Sorry, it's gone not responding. What's going on? I can kind of explain the NAS ones without having to click on it, I suppose. Coin Farm, basically you can see statistics on Bitcoin's volume. Okay, aggregate trade, you can see statistics on really large buy and sells. Anyway, I don't need to go through all them all, I suppose. And HY Blockchain, you basically can see some really interesting statistics. You've got a whole list of statistics that you can see in here. Okay, so these are all some really good websites where if you want to, if we wanted to just look at the open interest volume ratio, for example. This website's a little bit slow, but you can get sort of these details that you can't get on other websites. Okay, so it's pretty, it's a pretty good website for that. Okay. It's a little bit slow, but nevertheless, it's a good website. So yeah, those are the websites that I wanted to go through. Okay, and those are the ones that I'll be using. So I recommend you sign up. Just I'm not saying pay for them all, by the way. So please don't pay for them all. It's kind of not needed at the moment. So don't pay for them, but just sign up for a free account. So moving on. So volume confirmation. Okay, so what you want to see. Okay, so this is referring to confirmation of a trend. Okay, so when we're following the trend, we want to see the volume confirming that. When we see a reversal, we want to see the volume confirming that we're likely to get a reversal. What volume looks like in consolidation, and then what volume looks like as it is so breaking out. Okay. we can look at the average volume moving average. I use a custom. Okay, so I've put this in here because it's not standard actually. So I use a different and standard custom interval. Okay, so you probably might want to copy me, I suppose. And I generally am going to be switching this to 30. So that's my default. And that's not the default from given by TradingView. So I recommend, I suppose I recommend you do what I do and change yours to 30 as well. And that's the only custom interval setting that's the only custom setting I suppose I have on volume, as well as having this on histogram. So these are my settings if you want to copy them. Okay, so that's those settings, and I changed this to 30. Okay, so those are the custom settings I have. Apart from that, everything's pretty standard. Okay. So this is what we've gone through before, but just so we can really emphasize what we're looking for here. So again, I've got this will make more sense when I go through the examples in a second, but it's nice to have like a cheat sheet that you can refer to. So basically what we're looking for, this is a trending scenario. Okay, and I'll go through the examples in a second, but basically when price is rising, you want to see the volume increasing. Okay, so as you can see here, okay, so let's go over a bullish scenario. It's always easy to explain. So here you can see like price increasing. Okay, so here price has gone from here to here, price has gone from here to here, price has made a new high. Okay, so price has made a new high here. So what you want to see to say the trend is healthy is volume to also increase, and you can see somewhat the volume is like increasing here as price is increasing. So that's a bullish sign. It's telling you the trend is healthy, and you would still expect price to go upwards. Okay. So that's one thing that you'd look for, and that's in a strong bullish market where you're seeing price and volume increasing together. Okay, so every new high, you're seeing increasing highs of bull volume. If you are seeing price increase and the volume decreasing, so here, for example, when we zoom in, we are seeing here price going up and up and up and up, and we're actually seeing price for volume starting to fall off in this segment here specifically. Let's just say we're seeing price making new highs, we're seeing volume going down, and if anything, the only thing that sticks out is like big sell volume, like big sell volume sort of thing. Like that's signifying, okay, this is like weak. This is a weak uptrend here, and you are more likely to fall down. And obviously, you definitely fell down. Okay, so that's obviously looking at a weak uptrend. Okay, and the same is like when you're going down. So when the price is going down for a for a strong bearish trend, you want to see price going down, and the volume bars of the sell side. So the red bar is getting bigger and bigger and bigger and bigger. That's showing you that selling pressure is still there. People are still interested in selling at these levels, and you're going to go down lower. Alternatively, you're going to see price going down and down and down, but the volume is actually, just like on the buy side, getting smaller and smaller and smaller. It's basically showing you that people are not interested in selling here anymore, and then naturally you're going to come back up. I think there's a really nice analogy. I can't remember what book it is now. Can't remember what book it is, but I always stuck with me. Like can't think what the book is. It might have been it's an order flow book, but I literally can't remember the name of it offhand. I'm sorry, but they make a really nice analogy, and it's always stuck with me. It's like an auction. Okay, so trading is essentially like an auction. You have the bid. Okay, so the price where it is right now. And when the price goes down, obviously some people are going to view this as like a discount, so to speak. But initially, when it first goes down, okay, so maybe when there's a really big drop in the price of an item, you might have a second thought of like, well, okay, why has this gone down so much in price? Okay, and people are like hesitant to buy. Okay, but if this this item keeps dropping and dropping, okay, and people are realizing, well, actually there's nothing wrong with this just seems to be discounted. Okay, and then more and more people, as it's coming lower and and lower, this item is going to be, people are going to be starting to think, I'm not so, maybe when it was $50, they were like, yeah, I'll sell it. Then it dropped down to $40 and they're thinking, okay, this is, it was selling at $50 a week ago. I'm not so keen to sell it right now. And people are starting to think, okay, this seems like a little bit of a discount. It was selling $50, now it's $40. Maybe what's wrong with it? But I'm somewhat interested, but maybe it will come down a little bit lower. And then maybe you come down to like $25. And now this thing is 50% down. The sellers are thinking, you know what, this was selling at $50 a week ago. Why would I sell it for $25, almost 50% off its price? And likewise, buyers are thinking, wow, I can get a real good bargain here. This was selling at $50. I can buy at $25. 1 week time, I'll sell it for $40 and I'll, put that in my back pocket sort of thing. And that analogy you have to look at with volume. If you are going down in price, okay, if you're going down, but there's still lots and lots and lots of selling, you're going to be thinking as a buyer, well, this is going down lower because there's still so many people buying, there's so many people selling. The supply of this item is very, very large. I can just hold off another month and I'll get another 50% discount. So I'm not going to buy it now. But, obviously at the same sort of thing, if it's going down and the volume is getting less and less, and that's like kind of the supply is getting smaller and smaller, it's becoming more sacred. People are not selling at these levels. So, naturally you're going to auction back up to a more fairer price. And if that helps you, I hope it does. That I can just always remember. It was obviously not explained probably not as well by me, but that analogy always stuck with me. And it's always thinking at an auction, what's going to be just thought of as a really good buy, and what's going to be thought of what's a discounted buy where you envision it to come back up. And you're really always looking at volume. Okay, volume is really the biggest metric there, that you don't even really need a chart. You just need to look at the dollar value and what it was and what it is, and look at the volume to determine, is this a good buy, is it not? So yeah, volume massively important. So volume confirmations offers some real charts of what we're really looking for here. Okay, so in terms of this is taken from Bitcoin when it broke from 6k down to 3k. So obviously here you had a 50% discount in price. Okay, so as it broke down, the initial break from 6k was on really, really, really big volume. Okay, so as you break out of a range, so you have a range, as you break out of that range, if that break is on really high volume, then you say that is like a confirmed breakout. So it's if you break out on really weak volume, so if you're in a range and you break out of that range on really small average volume, okay, nothing extraordinary to speak home about, you expect that to be a fake out and actually go back into the range. Okay, so when you break out of a range, you really, really want to see that you break out of that range on an increase in volume. That is your confirmation you have broken out of the range. Okay, and if you break out of the range on low volume, it's considered a fake out and you're more likely to come back into the range once more. Okay, obviously we broke down from 6k on really high volume. So upon the really high volume break of 6k, you had then that area of consolidation. As you notice, the consolidation break really high volume, okay, through the low, and then you consolidate sideways for a good few days on decreasing volume. That's totally to be expected. And what happens, you break down, consolidate on low volume, and then you break down again. But you notice here that the volume on this secondary break, although larger in percentage, is on lesser volume. So you're going to reach a point where people are not interested as at 6k as selling as they are at 4k. So you're starting to envision here, okay, we've broken down again, but there's lesser sell volume. And then you see how you break down again and again and again, and the volume is getting smaller and smaller and smaller and smaller. So as you're coming lower, this is showing to you that you're declining on price. The volume is actually here decreasing. So it's showing you that the weak downtrend, which is actually bullish. Okay, so you see here for months of chop, so you went through here 2 months of sideways, basically a rounded bottom, where the volume is relatively low. You can see, relatively speaking, the volume is really, really low. If anything, you see increases in bull volume, 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 bull volume. So there was, relatively speaking, at the time, obviously it was a little bit of, even for myself, it was challenging to buy. But it was at this point where you had the confirmation of the breakout. So if you then view that this is the range sort of thing, something like this, and then you break out of this range here, and that was obviously on a massive increase than your average volume. This was the confirmation that you wanted to see to say, right, this is now a good buy. Okay, so wasn't arguably such a good buy at 4,000, but it was at 5,000. Okay, so obviously you increased in price, but you saw the confirmation that you've broke out on high volume. That's signaling to you you've now broken out of this range. It has acceptance, okay, and it's had follow through in terms of confirmation of a bullish uptrend. I'm sure I'm going to have a lot of questions, by the way. So another example here. So this is like another type of range that as you broke out of that, so you break out. I said this is a zoomed in. Sorry, this is a zoomed in photo of this section. Okay, so as you broke out of that range, you obviously broke out. As you broke out, I'm sure I'm going to have a lot of questions, by the way. So another example here. So this is like another type of range that as you broke out of that, so you break out. I said this is a zoomed in. Sorry, this is a zoomed in photo of this section. Okay, so as you broke out of that range, you obviously broke out. It doesn't look as high here because this is the 1 day chart, but here you broke out. Okay, you obviously then get this area of consolidation and the decrease in volume. So you can see here, if I just really highlight this. So my throat is killing me right now, but you can see how like the volume was decreased. Okay, the volume was decreased as you're in this range, and then as you break out of the range here, the volume increased. Okay, and as we all know, this like carried on for a lot longer. So that was a really bullish sign, basically. So if we had broken up here, but this volume carried on declining and going down, then this would have been not a good buy, and we would have expected it to pull back again. So you want to really see these confirmations of volume increasing upon breaking out. Okay, so the consolidation is expected to be low, and then so it kind of goes breakout, bull flag on, when we're referring to buying here, bull flag on decreasing volume, break up from that flag on an increase in volume. Okay, and if you don't get that secondary increase in volume, then you basically just you just have a lot of doubt about that breakup, and you're thinking to yourself, okay, this is not being supported at the higher price. Okay, and it's more likely to auction back down because there's people are not really supportive of buying up here. Okay, and you're just more likely to come down. So yeah, volume is really important. We can like load up some charts and go through them. I'll go through this one in a second. Let me do this slide first before I go back to that one. I'll come back to it in a second, but so this is like a few questions that I like preempted of what might come across here. Okay, so like, does technical analysis work on low volume stocks? So in my opinion, technical analysis does work on low volume stocks, but a reason why I would never trade is not for the technical analysis reasons per se, but more for liquidity reasons. So I've had a lot of people actually write to me over the last few days regarding Bitcoin, and they've said to me they've found technical analysis has worked better, funnily enough, over the last few days on Bitcoin when referring to like using Fibonacci. They've said the volume's really low, but my TA is working really well. I'm doing well. It's congratulations, that's great. But I would say yeah, technical analysis does work on this low volume. I'm referring to Bitcoin. It's obviously not extremely low, but nevertheless lower than average. The volume, technical analysis works on low volume, but it's just the liquidity reasons why you would take more care if trading with size. Okay, so you can trade on these lower volumes, but you just always have to think of the liquidity, like pros and cons. And then another question that I thought I think that someone might ask is, do Elliott waves work on low volume stocks? And this one I can confidently say no. So you wouldn't want to go across to something that's got really low volume and try and trade it like using Elliott waves. Elliott waves are really good, but they are a requirement that it has high volume, because Elliott waves are all about psychology. You have to make sure you're not trading against bots. The majority of the traders are humans. Okay, so Elliott waves 100% in my opinion doesn't work on low volume. You have to see high volume. This is why I wouldn't ever trade Elliott waves on go across to, I don't know, ZPA on Binance, random altcoin, and start trading off of Elliott waves. It's just not going to work. You have to stick to the higher more well-known stocks, in my opinion, or altcoins, to use Elliott waves. And if you do trade lower volume things, then obviously things like Fibonacci type style trading, which also obviously bots are going to be trading with you, then you're going to have much more success. So what we can kind of argue at the moment, that in Bitcoin you probably going to find that maybe like 70% of the volume right now is coming from bots. There's not that much human traders, I would have thought, with size. So when the market is like 70% bots right now, obviously your Fibonacci levels are going to work really well, because like the bots, for example, are designed to buy the 618. So when you also buy the 618, you're like, wow, this is working really well. And that's because there's a lot of bots also buying it with you. So it can definitely, you can definitely make money on it. All I'd say is always just think about the liquidity. And you can see right here, there's quite a few questions. So like, what I wanted to go over here is like somewhat of a safe short. Okay, so what am I looking for confirmation? As I kind of like have been hinting on, I suppose, that I've been only trading stocks over the last, really the last week and a half. Like I've stopped trading crypto. I'll come back to it, definitely. It's just at the moment I just find it so easy, so easy to trade stocks, because it's kind of just short and you're kind of guaranteed to make money. So here on this is Snapchat. Okay, so Snapchat obviously you can see the volume is decreasing, but nevertheless it started on a really high volume break. So obviously you gapped down, so you done your gap down, really high volume. Okay, this is signifying it to us that this next rally is probably going to be a very much shorter rally, because of the fact we've just done a really high volume break and the situation the market is in. And then you can see as you're coming down and down and down and down in price, that primarily speaking, you can see it's all basically bearish sell volume. So the high volume that stands out to you, obviously there's a few of buy volume, but it kind of stands out like sell volume is definitely in charge. And then even as you're coming down into this section, you're getting increase in bear volume. Here you see another pretty big bear volume candle of where you are right now. So like it's kind of a safe short, because you see no reason at the moment while the trend is still going down. So there's obviously one thing that we could say is from the initial sell to where we are now, the volume is obviously less, but this was a start of that was the start of the trend. So it's not always going to get that high again, but we can still see in the local where we are locally here, we're still seeing a lot of like increase in there's high sell volume. There's no panic at all for being a short, a short seller. You're under zero pressure, and these are sort of like really safe shorts. Okay, so how can you say like a safe short or safe long? Is like if you are continuing down with no pressure from the bulls. Okay, the bulls, every candle that they have, you can see here. Obviously, this refers to like stocks, but you can see here that this was just before the close. This one was after a really big gap down. You had a little bit of a above average volume, but you had just gapped down, let's say like 15%. So you get a rally from that, but it's not really people buying. It's just like people buying these sort of rallies. Okay, so after massive moves down. So it just like is really signifying to you that the confirmation is there that this is a good short, because firstly the buy volume is really low, and secondly the selling volume is like still is higher. There's still more sellers than there are, there's still like more selling interest than there is buying interest. E.g. like you can be fairly like safe in shorts, and we can go through some examples. I mean, let's just go through some examples here. So Bitcoin, let's go back up to the 1 hour chart. Okay, so let's just hide everything on this right now. I need to keep on the volume. Let's just remove this off the chart a second. Okay, so what we can be looking at here, let's go to the 4 hour. It's a little bit easier. Okay, so like on this upwards section here, so during this upwards movement that we saw on Bitcoin, what was nice about it was that we were obviously in, okay, so obviously this is what we have just come off the back of, but when we were like breaking up, obviously we can start to say here that this was our, let's just say this was our initial range sort of thing. Okay, so here was our initial range on Bitcoin back in 2 months ago. So 2 months ago we sat at around 7,000. We were in our initial range and we broke out of the range here. So here's the breakout of the range. You see how the breakout was on higher than what we had been experiencing. So upon this breakout, everything was looking really bullish and really good. Okay, oh, didn't try and do that. Tried to delete the line. So at this point everything's looking really good and really healthy, and then you pull back. Okay, so you get the pullback and you see how the volume is lesser than the breakout. Okay, so you got the decrease in volume. Okay, the decrease in volume as you got the consolidation. So standard ops breakout on high volume, the pullback to retest your level, okay, so to retest your high here, okay, so when you come back and retested this, okay, this high, you pulled back to retest on a lesser volume, okay, and then obviously when you pulled back to here, you got another really big increase in volume upon that retest. So this is like 100%, like, why are you not buying right now? This is 100% such an amazing buy opportunity, and obviously you increase like 30% from there, but nevertheless that's a really, really good buy. But that's step one: breakout, high volume, pull back on a decrease in volume. Even nicer if you then see that retest on higher volume like that. This is so bullish. So obviously you done that, and then you broke up again. And what did you do here? You broke up on higher volume once more. So this is telling you right now, well, this is such a good buy opportunity. This is really, really bullish, okay? And then once again, upon breaking this high on a higher volume, here you've done a new high here on lesser volume. So what is this saying to you? Okay, we made a new high on lesser volume. It's somewhat be cautious. And with the same, you did pull back, but you did pull back on like decreases in volume. Okay, so the volume was decreasing as you were breaking, as you were pulling back during consolidation, and that's normal and to be expected. Once more, you kind of break a new high here, and once more, you do an increase in bull volume once again. So, you know, when you were hitting then at around the 9,500s, everything was still looking really, really good. You were still seeing increases in volume. Okay, once more, you do, after your increase in volume, you pull back on a decrease in volume to be expected. And once more, you kind of do the retest. Okay, so you do this really nice retest, pull back onto the level, declining in volume, and then you break up once more again. Okay, this is when we obviously broke over 10,000. And if I just delete this, trying to keep the chart pretty clean, and then once more you make your new highs here, okay, your new highs, and the volume is still, you know, it's obviously at the same point at the highs, but it's really still really high volume. So this is really, really nice, equal or high volumes. That's like absolutely fine. At this point, you still would not have been bearish. Okay, there would have been no reason to be bearish when you were hitting 10,000s. Okay. And then once more, you try and just always trying to keep this clean. You break up once more again. Okay, so obviously from here, you do break up to a new high again, and you do actually get an increase in volume. So this is where, like, you know, this is where it was very hard. It's very hard to like cut short 10,500, because in terms of volume, anyway, there was no bearish signs at this moment in time. There was literally no reason to be bearish at 10,500. But what do? Okay, you start to get the reversal signals when you start breaking down the market structure here. So here you obviously start breaking down in market structure, and what stands out to you here during this whole upwards movement, can you see how everything is like really high bull volume only? And then this is the first standout for me, that this pullback was on a really big volume. Okay, so when we just signify this, okay, so where the breakout started, you can see that this sell-off was the biggest volume candle that you had, period, during the whole move. Even on this was the highest bull volume here, which did signify the top. This is known as a blow-off top, okay? So when it's generally higher than this, so it's not really a blow-off top at this point. Like, you wouldn't have thought really blow-off top. Obviously, it was a swing failure, so it did, all of this started with a swing failure pattern, but nevertheless, it wasn't even being easy to short it. But, you know, this is where it started to get a bit, you know, really more likely that the top was in. After, you know, you've started this on a swing failure, you've rallied back up to try and, you know, get things going again, and then you've been rejected on really high bear volume, and this is the sort of sign that you're looking for of a reversal. So this is giving you now your potential reversal signs. Okay, where's your next really big reversal sign? That obviously when this, all we'd been doing before was resistance into support, but now this resistance, support had been broken and back tested as resistance. So this was obviously your amazing short opportunity, and as you all know, shorted these levels. So and then obviously, you know, you are now breaking down, and you see how this breakdown here was on absolutely massive, really, really big volume. So then that leaves you here, after breaking down on really big volume, we are just consolidating now on lesser volume. So this could easily go down again, okay? And it's upon, and there's two options that you're going to get, obviously buy back or go down lower. If you go down lower, and you're bearish, you want to see an increase in bear volume, okay? Or if you break up from here, you really want to see a really big buyback volume, okay? So if you move up and the volume is really low, then you're not going to trust it. And the same, if you break down from here and the volume is really low, you're not going to trust it. So you want to see this break out of this consolidation. It's going to break up bullish or bearishly. Obviously, we cannot say 100% what's going to happen, but we can wait and see the confirmation upon breaking out of this consolidation range. Are we breaking up? Are we breaking down? Do we get increases in volume either way? Okay. Well, my throat is killing me, I'm not going to lie. So let's go through some questions. I will put this PowerPoint in the chat at the end. I'll put the PowerPoint. I will put this PowerPoint in the general chat for you. Okay. Let me see what we have going on here. One second. Cool. So, yes, the downloads are available. What's the equivalent of these websites for stocks? I mean, there's so many. That's like a really general question, but I really like to use Sierra Charts. Okay, so I would say Sierra Charts is really the best if you want to trade stocks. Okay, so it's not a website really, but Sierra Charts is really good for it. It's not really expensive. So Sierra Charts. And obviously that is one of the ones that I listed here on ones that I kind of recommend. I haven't got a link because I don't know why I haven't got a link. I'll give you the link. All you need to do is it's because it's like a downloadable program. It's not a website, so you just go onto the website and then you download the software. But yeah, Sierra Charts. If you remember the book, yeah, I will. I can't remember I'll post that in Discord as well. I'll try and search through my collection and tell you. Best timeframes for looking at volume changes that will reflect better entries, 4 over or 1 hour. I mean, I wouldn't say that there's a better time frame. It all boils down to your style of trading. Okay, so there's no better time frame. Okay, so I cannot say the 5 minute is better than the 4 hour, because if you only have 1 hour at your computer a day, then clearly the 5 minute time frame is kind of useless somewhat to you. So it all depends. There's not a better or worse time frame. It all depends on your style of trading. Okay, your style of trading and how you trade. That's all I can say. That there's not an answer of like the best time frame. You know, I just can't say that, because for me, if I'm scalp trading, then obviously the volume confirmations on the 5 minute are really good. But if I'm looking for a swing trade, then I'd say like the 4 hour or daily are really good time frames. So it all depends on your style and how you trade. On the 1 day chart, would you look at moving average length 30 and would say it's increasing, not declining? Do I need to look at candle tops? I don't understand the question. I would look at moving average length 30. So I suppose you mean the volume moving average length 30, like I said, and would say it's increasing, not declining. Okay. Do I need to look at candle? So let me try and figure out what you're trying to say here. So on the 1 day chart, yes, you look at the moving average length 30, yes, and you would say it's increasing. So like increasing, yes. Do I need to look at candle tops? No, I don't 100% understand the question. So, no, I don't know what you mean by looking at candle tops really, but no, you don't. Sorry, I don't really understand the question, but so I don't think, no, I wouldn't look. I don't know what you mean really. Sorry, by what would you look at candle tops? But yeah, you'd obviously look for the closes. I suppose this is what you mean. Like, are you going off of closes? Yeah. Yeah. I suppose. Yeah, wait for the candle to close before you obviously know how much volume there is. I'm not 100% sure of the question of do you need to look at candle tops. So if you want to post the question again, I don't really know what you mean by it. Sorry. Why do you have 30 moving average set as the medium on TradingView? Because the way that I view it, if I'm looking at like a range on a higher term time frame, then we can say that on average there's like 30 days in the month. And if I'm looking at like a large time frame view and we're in a range, okay, so obviously when we were ranging here, we were ranging for more, a month, over a month, then, I want to get it's just the way that I look at it is because there's like more or less 30 days in the month. I want to get the average volume over those last 30 days. So that's the reason why I use 30 days. And it's more from higher time frame ranges. I just feel that the volume moving average 30 works really well because it like encapsulates that last month. Next one. Do you still close your positions for stocks every night? No, I don't care about paying overnight fees because I feel a lot of these stocks at the moment are like gapping down. I haven't actually done the style of trading on stocks where I close and open every morning and every night for a while. I've been swing trading them, like holding and just paying fees for a long time now. So yeah, I don't actually care about paying for overnight fees or holding any positions because the market is heavily moving in my favor with the shorts. So, you know, it's more likely to gap down 20% than it is gap up 20% right now. So, yeah, I have, happy to hold the positions every night. The gaps, I suppose, are somewhat scary, but in this situation of the market, the gaps are so much more likely to be down at the moment. You know, speaking, obviously, this is no guarantee of what's going to happen in the future, but as it stands right now, for the last week, I've been happy in shorts, and you know, we have been seeing 15% gaps down, so it's nice. Do you use your fixed session volume profiles together with your volume bars? Yes, yes, I do use them all together. And yeah, I do use that all together, but I'll be covering things like fixed and session volumes in like the streams to come. But yeah, I do use them all together. If we are on an upward trend and we get a pullback on a flag like a test to support or a fib level, is it a must that on the test we should see buy high volume back up? Not a requirement per se, but definitely preferred. Okay, so yeah, it's not like 100%. You 100% need to see this, but definitely it's like a preferred. If you see that, then it's a lot more bullish. So you break up, you pull back to old resistance, slip to support, let's say, and upon that retest, you get an increase in bull volume again. Then you're going to say that that's a lot more bullish than retesting the level and just like coming back up again on low volume. If you took the two scenarios, you're going to say the one that retested, you know, come down for that retest on declining volume and then hit that retest and start to move back up on an increase in bull volume. You're going to say that's definitely more bullish than pulling back on the level on declining volume and then moving back up again on declining volume. That way you might want to just wait for the breakout, okay, take the last high, and then do you get that bull volume come in, because you might not always get the retest on good bull volume and then you have to wait to the breakout. But yeah, definitely preferred that you know, you definitely prefer out of the two. And I had a question in here earlier. Would you mind showing your stocks during the stream? And the answer is yes, I do not mind. So let's do this. I'll show you this a second. This is my stock watch list. So I guess if you just want to like look at this, and this is the stock watch list that I've been trading recently. I guess one of the best. Well, obviously EasyJet's been pretty insane because of being an airline and all the flights have stopped. This thing is just like, you know, crazy. But yeah, like, yeah. So yeah, this is an example, I suppose. Well, I can see this as well. This is an example that you know, you can definitely make money on in this right now. So this guy has like times crazy kind absolutely crazy games. I don't even know offhand how much of a time that is, but this guy's done crazy gains on his account, and there's like evidence that you could definitely make money trading crypto right now. But for me anyway, it's just easier on the stock market, but there's evidence you can make money on crypto right now. Cool. Oops. Yeah, does anyone else have any other questions? Dun, 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 dun. In regulated markets, there are limit up and limit down, aren't there? How come the gaps are so big? I'm not. I'm not going to even try and pretend I'm going to be able to answer answer that question for you. That's above my knowledge. I don't know. I have no idea. So that question, I'm just going to say I cannot answer that question. Why are the gaps so big? Just because they are, I suppose. So yeah, I'm sorry, Matic, but I cannot really answer that question in a professional way. I guess the gaps are just that big because the gaps are that big. Slide 10 in presentation. I do have to look at the tops of volume bars. Okay, so let's go back to the presentation. Slide 10. I do have to look at the tops of the volume bars. Moving average 30 is declining. What do I have to look for volume bars or moving average 30? So you're looking at the closes of the, okay, I see what you mean. So you're referring to these as the candles. So you're looking at the closes above, this is the average volume. All this line is saying is this the average volume of the last 30 days. So we can see on this coin that the average volume per a day is like 4 billion. Okay, so on this volume candle that we're only getting 2 billion. So that's obviously nearly right, it's obviously over half, but it's obviously lesser than the average volume. Okay, so the average is 4 billion. We're only seeing 2.0 or 2.2. I don't know, I can hardly see this on the screen. 2.7 billion on this volume, so that's obviously less than average. Whereas on this volume we can envision that this was maybe like 12 billion volume, so this was a much higher than the average of 4 billion. This 12 billion candle is a good confirmation. So yeah, we're seeing this close above. That's your confirmation. Yeah, so you see this like somewhat like obviously close, doesn't have to close, but when you're seeing it coming above the average and it's really high, that's what you want to see. Okay, so do I have to look for the volume bars or the moving average 30? Yeah, the answer is the volume bars. So you're looking at the volume bars, not the average. Okay, so you'd be looking at this volume bar above the average. Okay, so like this is like times 3, let's say, above average volume. That's really, really, really bullish, isn't it? Whereas this one, obviously, it's above average, but it's not really anything stand out, is it? Whereas this is 3 times average volume. That's really stand out. That's really, really good. That's really like bullish of the trend. If we'd moved up here and the volume was like this, well, yeah, it's above average volume, but it's nothing like above the last high volume. So it's not an increase in volume. It's higher than average, but it's not really anything to get excited about. Whereas this is something to get excited about because you are breaking highs with really big increases in volume. Yeah. I short stocks. There's a few places where I will short stocks, Interactive Brokers and Trading 212. I enjoy using both of those at the moment. Do you find that using the volume average and volume breakthrough can assist in drawing a relevant channel, whether the relevant channel is trending up, down, or horizontal? No, I can't say that I've ever used the volume for assistance when drawing a channel. Yeah. So I guess Steve, no, because I've never really referred to the volume when making my channels. So I'm sure that some people do, so I'm not saying it won't work. I mean, be my guest and try it, but no, I don't do that. How do you identify a bottom with volume? Because I was watching one of your old videos where you were talking about identifying a bottom with MACD, RSI and stochastic. Yeah, that video is like 2 or 3 years old. How do you identify a bottom? So really, I mean, that's a very complex question, but I suppose it kind of falls under the answer. I guess it's kind of an answer for another question. So you're going to be looking for something like Wyckoff accumulation. Okay, so that's how you can identify a bottom, by looking for signs of accumulation. And an example would be like Mana. Go to Mana, or like this is so that the last one that because this is the last one that I traded off of a bottom. So I didn't get the exact bottom, but I got it off of the after it's done its test. And this was for me the sign of the bottom. So there's a few easy ways that you can see a sign of the bottom, I suppose. Obviously, seeing things like springs, seeing things like increases in bull volume after the spring, seeing like rounded bottoms. These are all ways of identifying bottoms. But the answer is like half an hour long. So obviously I'm going to cover like accumulation schematics, but yeah, it's too much to cover for the question at the end of this video. But basically, to give a rough easy answer, rounded bottoms, like you can identify bottoms using that, you know, look at volume. Okay, so if we try and go on to, I don't know, something like Link, when it was done its rounded bottom here, okay, you bring up the volume and you can see, for example, rounded sort of bottom here, and then you broke out of this. So this is the rounded bottom, and then you broke out of that rounded bottom on a really big increase in volume. Well, that's signifying to you that this was a bottom, and you know, then you've done this pullback and the volume was decreasing, and then you break up again on really high volume. And so whether you bought like at this retest, because obviously here you do retest once more, okay, this high to this high. So whether you bought like here, you know, back up to that channel 280%, or whether you bought here to the top of the channel like 240%, like that's what you're looking for. You're looking for these breakouts with increases in volumes, the pullbacks to the levels on decreases in volumes, and then breaking up again on increases in volume. So yeah, Link's a pretty good example if you want to study Link, but that's like what you're looking for. And am I going to do a quick Bitcoin update? I guess my update, I don't know, like the thing is, my updates are really bland, because I'm not in the market. So secondly, there's like nothing going on, and the last update that I done on Sunday for you all is going to be exactly the same thing as I'm going to say now. So I can cover this in literally like a minute. So let's go. I will cover it, yeah, but my update is fairly like, you just got to wait. I mean, the key levels, I'm not really interested in anything bullish until we get above 6,400. 6,400 for me is a sign of strength, claiming that level being the macro point of control. 6,400 to 6,600. Above that, then I will say, yeah, the bulls are looking, you know, game back on for the bulls. But again, I want to see us get above those levels on increases in bull volume. Okay, so we'll load up the volume. I want to see, if we claim 6,600, then I want to see that with evidence that the bulls are, you know, that there's actually buying activity at those levels, and it's not just going up and up and up on increase, you know, on like really low volume. Then I will not be interested in buying it. So claim 6,600 on an increase in bull volume, like good bull volume, then I will look to get long again. But you know, as it stands, you're in this sort of channel. So I'm still looking for something like this to go up to this level and test it, but then I am still expecting, until proven otherwise, expecting new lows to come. So yeah, my opinion on Bitcoin right now is it's obviously tradable, but the volume is awfully low right now. The volume, open interest, everything is just like, there's just not really much going on in this market right now. So I mean, for me to get interested again, as I've told you many times, I honestly couldn't care less if I buy the bottom. I will be happily, you know, I couldn't care less whether I buy less Bitcoin at 7,400 than I do at, you know, buying now at 5,300. Like, I could not care less, because I'm in it for the percentage gains. I'm in it for like actually making money, not just trying to buy as much Bitcoin as I can buy, sort of thing. So like, it doesn't like I think that you should have the same opinion as me. If you are actually a trader and you're not actually just obsessed with what you're trading, then you should have the opinion of, it doesn't really matter if you buy less Bitcoin, you know, because you're still going to make money, whether you buy it here and you trade it up high, or whether you buy here, you know, you're still going to make money. So you know, for me, that's the line in the sand where I will be interested in buying again. Until that, I guess you're in this sort of symmetrical triangle. It looks like you might be in a triangle type pattern here. So you could see how this breaks, maybe. Okay, so it looks like you might get a break from that by tomorrow. So you could see how like this sort of pattern breaks. Okay, and again, the confirmation of this is, do you break up or do you break down? And then do you break up on increase in volume, or do you break down on increase in volume? So yeah, I'd say like this is the pattern that you could be trading off right now, waiting for a break of this pattern. It's obviously contracting, so the break should get some follow through. So yeah, that's all I would say right now. Fairly simple analysis. My thoughts remain exactly the same on Bitcoin as they did like 1 week ago. Yeah, I suppose that like this is like a sort of the pattern that you could look for right now, because we are contracting right now, clearly. So I guess if it makes it really simple for yourself, then you can put on something like this and say, well, that's the high, that was then the low made, and then this was the high made, okay, and then this was the low made, Okay, so we can see how it's getting tighter and tighter. You could even go like this now and say, well, this is getting tighter again. So we're going to break up to the upside or the downside. So you could say that the resistance right now is 5,600 and the support is 5,000. Wait for a break of this, and then you'll look to challenge that next level. Wait for a break of this, and you look to challenge the next level. So there's a few ways that you could trade this, but I think yeah, that this one of these two ways is pretty decent that I just showed you there, and it looks like you're going to probably get a symmetrical type of triangle forming here. And obviously this is pretty nice because you are declining in volume as the pattern is going along. So this is really textbook standard. You are declining in volume as the pattern is going along. When you break out of the pattern, you want to see the increase in volume for confirmation of the pattern break. So that's what I would say. That's what I would say to look out for next. It's cool. So yeah, thank you everybody. The trick behind trading is volume. Yes, honestly, like volume obviously, yeah, does have such a massive part of trading, and like that loads of people don't trade it properly, or all they do is like literally look at this, and obviously there's so much more than just looking at these histogram bars. But you know, it's like just, yeah, there's so much more. But yeah, anyway, that's so yeah, that's it for tonight's stream. I hope that you've enjoyed it. I hope it's you're excited for what's to come in the next, you know, coming weeks, because we've got so much to go through. So yeah, your minds are going to be like, oh my god, how did I not know this before? And you're gonna like increase your trading like times 10. I'm absolutely sure you will. So yeah, it's going to be really exciting. So yeah, it's going to be great, and I'm looking forward to like teaching you all about volume, because you know it's so integral, I suppose. So yeah, I hope that you've enjoyed this one, the introduction, and you're looking forward to next week. So yeah, thank you once again, everybody. The questions were about the book and stuff. Like, I'm going to try and find out which one that was. I can't remember offhand, and I'll post it for you all in the chat. Okay. So yeah, have a great day. Thank you once again. And yeah, cheers everybody. Thanks, and catch you over in the chat on Discord. Thanks, and bye.